Today, market participants are focused on the results of the Fed's meeting. Moreover, tomorrow, the ECB will announce its decision on the key interest rate. In this video review, we will take a look at the current and future movement of the European currencies. The loan data in Europe turned out to be extremely disappointing. The situation in the corporate sector is rather alarming. In March, the eurozone corporate loans showed a zero rise compared to the same months in the previous year. Economists had expected a slowdown to 2.2% from 3%. The fact is that the European governors imposed restrictive measures only in the middle of March. Thus, April report will surely reflect a slump in the corporate loans. The eurozone private loans also eased to 3.4% from 3.7%. In fact, the data exceeds the forecast. Analysts had expected a slowdown to 3%. Nevertheless, the indicator is dropping. Thus, the economic recovery may be rather long and complicated. Despite the weak figures in the eurozone lending market, the single currency is still climbing. The main reason for that is the expectations of the US flash GDP data for the first quarter. As we had predicted, the euro-dollar pair hit the resistance level of 1.0885 and returned to 1.0815. It's quite possible that the price will continue fluctuating within the range of 1.0815–0.885. Thus, traders may use the following trading recommendations. Buy positions can be opened above 1.0870 with a target at 1.0885. Deals can also be initiated if the pair consolidates above 1.0910. Sell positions can be opened below 1.0840 with a target at 1.0815. It's also possible to enter the market if the price consolidates below 1.0810 with a targeted level at 1.0775–0735. At the same time, the British pound is losing ground amid political and epidemiological situation. There is information that Boris Johnson's advisors have forced scientists to publish recommendations to loosen lockdown measures. The story could belong into a real political scandal. Moreover, the news may lead to the extension of the quarantine that could result in graver economic problems. Nevertheless, market participants are mainly focused on the US flash GDP data for the first quarter. The report is even more important than the FOMC meeting. Analysts suppose that the two emergency cut of the key interest rate made during the previous meetings could be enough to prop up the country's economy. At least it's too early to discuss additional measures, as it's necessary to estimate the influence of the previous auctions. That's why today's meeting is likely to be ignored by traders. At the same time, the GDP report may be immediately priced in. According to the forecast, the US GDP declined by 4.6%. Notably, in the US, containment measures will be introduced in the middle of March. That is particularly the end of the quarter. However, the economic downturn is still rather significant. It's quite possible that in the second quarter the US economy will go on slumping. Moreover, the recession will be enormously deeper and it will take a lot of time to get back on track. Thus, the euro rise was almost predictable. At the beginning of the US trading session, the pound sterling is also expected to grow. As we had predicted, the pound-dollar pair met local pressure on the level of 1.25. Besides, the pair is likely to fluctuate within the range of 1.2425. Traders should pay attention to the break of the range limits. Sell positions can be opened below 1.2390 with a targeted level at 1.2350. 1.23. Buy positions can be opened above 1.2525 with a targeted at 1.2550, 2570. Local buy deals can be performed within the mentioned range. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.